Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. It's Friday, right? Probably heard this from me before. It's Friday, you know what that means. It's Options and Play. If it's Options and Play, it's earnings on the radar. And we have officially entered earnings season. Some good action, not great. So one of the things I noticed this week is that some of the moves for the reports are a little bit more muted, but I think that's also a symptom of maybe like the kind of like the market grinding higher. It's kind of sucking a lot of the volatility maybe out of the reports, but um, it just makes you want to be more selective, right? Just focus on like the really good setups. Still plenty of opportunity, but whereas last quarter it seemed like you could go a little bit more aggressive and go after a lot more setups because a lot of things were moving in wider ranges. This quarter a little bit less so, at least up until this point. But there's still really great setups, and the ones that that are solid are working, aka Schlumberger on Friday, right? So Monday, the markets are closed. It's Martin Luther King Jr. Day, so no markets are open on Monday. And considering news is usually dead on Mondays, it's something I could get used to having the 4-day work week. Right? Um, it's a good day to get some rest and relaxation, maybe catch up on news, maybe start the game plan for earnings for the upcoming week, right? Because once we come back on Tuesday, things will pick up, and really over the next 2 to 3 weeks, things will just really, get increasingly busier and busier. So let's jump into it. Tuesday morning, J&J, what I have up here, pricing in about 4 points. So J&J was hit pretty hard on this was talcum powder. So there was chatter that they knew about it going all the way back to, 40 years or something like that. So the stock got hit really hard and it hasn't really rebounded. Um, it's kind of a tough setup, right? So it was hit off of something non-earnings or fundamental, non-earnings or revenue related, right? Uh, so that's kind of like an overhang. Plus, options 4 points. That's not really that cheap for J&J. And the other thing to consider is that they've actually already reiterated guidance. So when this happened, they came out kind of preemptively and issued like preliminary guidance, or in this case, it was a reiteration. So some of the uncertainties removed. J&J doesn't. It hasn't had a history of responding particularly well to earnings. So I do think it could move, but at 4 points, not confident that it's going to be much more than that, and even then, not even sure which direction I'd be leaning. So, at the moment, thinking about just leaving that one alone. EDU, I wrote up right. I wrote up in the letter going out. I like this setup. Haven't really traded the Chinese names much, but they're starting. Some of them are starting to come back to life. EDU, right? Nice little. Well, it's breaking out a little bit today, but going in, just kind of flagging right at this resistance, right? Options are priced in about 7 points. Moved right here. Moved about 11. So, not quite half of what it was last quarter, but definitely less than what it moved last quarter when it was basically at the exact same price right here, right? So if it misses, last quarter it dropped around 50, so you're thinking maybe it could have like another quick move down into like the mid to low 50s, right? Versus a breakout and a really clear gap up into like the 70s. So I thought that was a good volatility candidate. So strangle in this case, just because it seemed like it set up well technically, and the options are less expensive than what it moved last quarter. Tuesday after the bell, IBM pricing in about 6.5 points. Just absolutely destroyed last quarter on the print and then in the aftermath. But they did announce the Red Hat deal, right? So this will be the first quarter that they report with the Red Hat deal, although it hasn't closed yet. Um, the setup appears more bullish to me, right? So it's through it's hanging above 120. It's coming up into like the top like 125. Uh, the trade that's currently open is I was looking for a ramp into the report, and it's starting to ramp into the report. So undecided whether gonna keep this open through earnings or not. Uh, if we do, probably gonna have to pick up some sort of put hedge or some sort of downside bet, just because got destroyed last quarter, and odds are probably not gonna turn around that dramatically in a couple quarters. But I think like technically bullish, but you got to be careful. And if it keeps running, odds are probably end up just like cutting this thing loose out of earnings. So it might not be involved by the time earnings roll around. But we'll see. But that's one. That's one. I'm leaning. I'm thinking bullish. But it would be cautiously bullish just because last quarter was such a tough one. Okay. Also, after the bell Tuesday is Win. Well, they're not. They haven't confirmed yet. Which may present some opportunity, right? But what I was thinking is that there's a pretty big difference between this coming week's options and the following week, so February 1st expiration. And what I'll talk about in a second is that LVS reports next week. So even though Win hasn't confirmed, there still is a chance that they report next week, and the options are cheaper than the following week because they haven't confirmed. So even if they don't end up reporting this coming week, you still have that LVS report as a catalyst. So thinking maybe some sort of speculative trade, just some like cheaper out of the money or lower debit out of the money options, right? Just to see maybe they end up confirming the report and you get the kind of the implied volatility pop in the options. Or if they don't, then you still have LVS which reports and Win will definitely react to that. Okay, Wednesday morning, ASML, chip stock, well, semi-equipment name actually, pricing about 12 points. So the thing with this is that LRCX and AMAT tend to move together with this ASML. So I'm thinking maybe a sympathy trade with either of those two, LRCX or AMAT, because they both have weekly options, whereas ASML doesn't. Those are monthly. The ASML 12-point straddle, like those are monthly options. The sector's been tough, really tough. Just a really steady downtrend. So I guess I'd be leaning a little bit more negative because they're at the top of this trend. And Taiwan Semi, which just reported yesterday morning, pretty rough warning. I mean, even though like the stock didn't get hit that hard, it doesn't seem like it's going to translate well to like good guidance for this group. So. Leaning more negative, but thinking maybe a sympathy trade with, targeting LAM or AMAT as a sympathy trade. UTX. This is one I like for next week. So pricing in about 375, so like three and three quarters. I'll be honest, I don't trade this one too often, but I think this quarter is more interesting. Probably like a volatility strategy, so a strangle. In this case, because it's the first big industrial report, and I like being in like the first major report of a sector typically, and technically I think that there's room both ways, right? So it's underneath really key support at 120, and it's about 13, 14 points off its just recent low, down around 100. So. Still some uncertainty because there hasn't been any big industrial reports. Technically, it's underneath key support. It's well above the recent low, so it seems like there's room to maneuver. So I'll be watching that one on Wednesday morning. I got that one circled for sure. Wednesday after the close, Citrix software stock pricing in 6.5. This company really has been like a beat and raise machine, and it's held in pretty well, right? So overall. I mean, it did dip, but it's bounced back off its 52-week high, but still within striking distance of the 52-week high. So, really consistent beat and raise. So, expecting another strong report. Feel like maybe you get like the upside surprise and move up into like the mid-teens. So maybe a speculative long on that one on Citrix. And then LVS, like I mentioned before, LVS. Wednesday after the close, pricing in 3 points. Really make or break quarter technically, right? So flagging right at a couple month resistance above the 100-day for the first time in several months, right? Big bounce off the low right at right at resistance, right above the 100A. So really, really, really critical technical setup going in here. Pricing in 3 points, uh, which is not. It's definitely moved more than in the past. Like the issue with LVS is that they missed twice in a row though. So back to back misses. So either targeting win, or if not win, then like LVS, probably some sort of like low debit strangle is what I'm thinking. Maybe go out like $3 either direction, just to see if it a major breakout. You're probably looking at like what, like mid to low 60s, and then on the downside, if they miss again, I mean the range dictates that this could drop all the way down to 50 to 49 before it really finds buyers. All right, URI also on Wednesday after the close. I'm thinking that this is going to be a good read through to CAT. So CAT will probably be the way to go on URI. As like a sympathy trade. There's already a put fly open, so we'll probably hedge it out on the upside. Maybe buy some sort of like upside call position, like a spread, or just like a straight like short term call, something. But URI reports Wednesday, so CAT's going to be the way. I'm going to go after that one. Xilinx also Wednesday after close, 6.5 points priced in here. This is top name in a pretty terrible group overall, right? The chip stocks. This one you can see. I mean, it doesn't take a chart master to realize that this is definitely like the leading name in the group. I mean, just a couple points off its 52-week high. I feel like this is set up for higher prices, right? I mean, it's really really strong. Great underlying demand, keeps bouncing back really quickly, but maybe a calendar spread, right? Like it stocks still aren't really breaking out into 52-week highs, so like I feel like this could keep working its way up, but maybe on earnings, like good news is already expected, so some sort of strategy where you take advantage of the near term implied volatility in favor of like a longer term position. So like to sell the short term, buy longer term, something like that on Xilinx. Thursday morning, kind of quiet. Bristol Myers is Thursday morning though, and they're looking at about like 2.5 points on that one. They didn't guide at the JP Morgan conference, and there's still the gap from the Celgene deal up to about 50 area. So there's some room, right? So that's about $2.5. It's priced in at about $2.5. It's not my favorite setup, but maybe you see like a 3 or 4 point move, maybe. Right? So I mean, if it closes the gap to 52.50, then it's got a really obvious level of resistance at 54-ish versus if it's bad, maybe mid 40s again, maybe. Like I said, it's not my favorite setup, but it's really like the only interesting name on Thursday morning. I guess my gut says higher, just because it's got this really obvious gap, and it's come back a nice. Well, it has come back most of the move, but it still has like this 2.5 point gap. So my gut says higher, but I'm kind of undecided with that one. Thursday after the close, Intel. This will be one of the big reports next week. Person in about 2.5 points. So decent strength recently. So compared to some other chip stocks, decent, but it's really stuck under this huge resistance here, right? Just really been just like a concrete ceiling at the 200-day here. I'm thinking this is one of the better setups. Breakout, right? I mean, it's right under resistance, so it wouldn't take a whole lot to clear this resistance, right? And it's pricing at 2.5 points, right under resistance, a breakout, right? And then it has like a really obvious gap up to like 52, 50, 53. So that's about a 3.5 point move. Versus, every other time it's failed up at this 49 area. What's like the first area of support tends to be down 46.50 minimum, right? Probably like closer to like, sometimes it's rolled all the way down to the low, but like you're looking, maybe like 46. So it's at 49. Whereas every time it's failed here, it's at least pulled back down to 46, if not lower. So that's like 3 points, maybe more on the downside versus 3.5 on the upside. It's pricing in 2.5. You might not get a whole lot more than that, but I just feel like it's a kind of an interesting setup compared to some of the other chip stocks because it's shown some relative strength. It's got a really obvious area of resistance above, a pretty well defined range on the downside. So I got that one circled for sure for next week. Starbucks pricing in about 2.75, so 2 3/4. Coming off like just a huge pop and run last quarter. The stock has remained pretty strong, but they issued guidance back in December. I think it was like an analyst day. So that removed some of like the volatility around earnings. I really feel like this thing. I mean, like look, you can see the trend. It's really obvious here. Like I feel like this thing is still in like a nice uptrend. Probably wants to work its way higher, but may need more time. I certainly am not expecting this type of move like it moved last quarter, especially after they've already given guidance. So maybe some like a longer dated call spread, right? Thinking that maybe like a month or maybe like 2 months now, like it's back up into the 70 area, trying to like grind higher because the restaurant stocks have been pretty good overall. So I feel like this thing could keep grinding, but maybe not a huge immediate move. All right, Friday morning, Appy. It's really like the main name. Well, really like the only like interesting name Friday. Pricing in 4 points. It's like Bristol Myers. They didn't guide it to J.P. Morgan, so there should be a move here. It's lagged other pharma stocks pretty substantially actually. Strong numbers in November initially gave it a little pop, but it still is underneath like a huge area, like a huge pocket of resistance, like multiple moving averages, a lot of overhead. It's got this really, you can see right here, right? It's really clean downtrend. Draw my lines better, so you can see like a really clean downtrend. Ton of moving average resistance here. I've tried this on the downside the last few months, and I'm honestly still thinking bearish here. But because last quarter was pretty strong, they got a pretty big buyback. Thinking it would have to be some sort of like speculative put bet, like something like lower debit, like some sort of spreads. Looking for probably like a retest of low 80s, high 70s. So don't want to go crazy with it because it's kind of against the fundamental trend of like good earnings. But technically in a really serious downtrend, fundamentally the earnings have been okay. So kind of like mixed signals, but I'd go with the technicals over the fundamentals into this one just because of like the stock performance. And that's it. So might be a short week, but there's definitely some interesting names. The following week is when you'll start to see the big tech names get going. So that'll be an even busier week on top of it. So this coming week is going to be more about industrials and semis in particular. The following week is when you're going to get some of those big FANG names. So that'll definitely be something to watch. But I hope you guys enjoy the long weekend. Reach out to me if you have any questions about upcoming earnings reports, right? If if you want my opinion on like a trade setup or a trade in general, it's like that's cool. I'd love to hear from you. And as a programming note, I just want to say it again that the coaching session scheduled for Monday is going to be pushed to the following Monday, the 28th, just because Monday is a holiday, obviously. So I'll let you guys rest up and relax, and then the coaching session will be on Monday, January 28th. So again, have a great long weekend, and I'll talk to you guys on Tuesday.